Back for another Talk About It Tuesday, and we have a home ownership question today. I get a lot of questions like these from first-time home buyers. So here's the question. Can you say something about tactics to find viable rent-to-own options or other home ownership strategies? Okay, rent-to-own, also called lease with an option to buy, is a technique in which the potential buyer approaches a seller and says, instead of me buying your property outright, I would like to lease the property from you and pay you rent. And on top of the rent, pay a premium that goes towards the down payment. Also, I will give you a sum of money, far less than a normal down payment, to start the process. So let's say the rent is $1,000, just use an arbitrary number. You would give them your regular, first month's rent, security, plus you would give them maybe another $1,000 as a down payment, and then on top of the rent every month, maybe you do another $200-300 that goes towards the down payment. You would then have a duration for this part to last, right? To be able to exercise the option. So let's say you did 2 years. So for 2 years, you'd be paying your regular rent plus the premium on top of it that's going towards the down payment. At the end of the 2-year period, you have the right to exercise the option to buy. Meaning, if you decide at that time to buy, you will still have to get a traditional mortgage, but the money that you are putting down will go towards the down payment. If it's not enough, of course, you have to add more. If it's enough, that's fine. If you fail to exercise the option to buy, whether it's your fault or not, meaning maybe your credit isn't good enough to qualify for a mortgage. Maybe the bank doesn't think you have enough income to qualify for a mortgage. Whatever the case is, if you don't qualify for a mortgage at that time and you don't exercise the option to buy, then the seller gets to keep all the money, every penny that you put down. That's right. That's the scary part of it. The good part of it is it's like buying a property on layaway. Right? So instead of having to come up with all the money right away, you get to live in the space that you want to buy, test drive it basically, while you're putting money down on it. A lot of issues with that strategy depending on where you live. So if you live in a place where there's a shortage of housing, then it will be very difficult, right, to find a landlord willing to wait 2 years to sell his property, when I'm sure that landlord will have people banging on his or her door constantly, bidding up the price to try to get into the place immediately. So that means the person is willing to carry you as a tenant, because that means they're not tired of landlording. That means the person is willing to wait for the purchase, and the risk incentive for them would only be that they're getting more money basically because they rented to you for the 2 years. So, and if you don't go through with it, they still retain the property and can put it back on the market after having kept that money. So I've been on the side of the seller before, and I had a potential buyer actually, not be able to exercise the option. So it kind of worked out in my favor, and I held on to that property for many, many years after that, and the value went, way up. So I can see the incentive on the seller side in a market that's a little slow, where there are not a lot of potential buyers, qualified buyers. But I know this questioner is living in New York City. In New York City, there is a shortage of housing, and there's no shortage of potential buyers, and the prices are through the roof. And so we have to look at the whole process of home buying. And I think sometimes we try to find shortcuts when we fall short. So the process, if you're a first-time home buyer, is really basic. You will be required to put a down payment on a property of between 3 and 3.5%, depending on the type of loan you get. I think FHA is 3.5%. Other traditional loans are 3%, which means the bank is going to finance 96.5 to 97% of this. So you don't need the entire amount. But the bank will only finance 97% of this purchase if they are confident that they will get their money from you consistently every single month. Not only their money, but the taxes and the insurance as well. So if you live in a place like New York City where this questioner lives, in Brooklyn in particular, the least desirable neighborhoods, will cost $650,000 to maybe $800,000 in the least desirable neighborhoods. In the better neighborhoods, you're going to pay $1 million to $4 million, right? The high end neighborhoods, $4 million to $10 million. So the issue is for home buyers being able to afford to live where you want to live. So what are some options? There are programs for, depending on your income range, where they have basically lotteries for affordable housing. Apply for all of them. They do have programs nationwide for down payment assistance. Get in those programs. Google it and find out the programs in your area. Short of that, you really have to make decisions. If you want to live in a city like New York City that's super expensive, and your income denies you, a qualification for a mortgage, then you got to change your income. There's no shortcut around that. A bank is still going to look at you the same way today as it did 5 years ago, 10 years from now. If you don't have the income to support the mortgage, they're not going to finance it. And prices in New York City will not go down. They're not going down, right? We don't have a flight of people like some other cities. So if your issue is a down payment, that's just a question of savings, right? So you have to be able to, so how much do you need to save? That's a good question. If you need 3 to 3.5% down, you live in a city like New York City where properties are probably going to be $1 million. So you need $35,000 plus the closing costs. So if you live in a place like New York City, closing costs are usually about 6% of the purchase price. So that's another $60,000. So you need about $90,000 to $95,000 plus your moving expenses, plus all the furnishings you're going to need in your new home. So you should probably save over $100,000 if you're going to live in, buy a property in Brooklyn. If you live in other places, and here's an option, you can live outside of Brooklyn and still work in Brooklyn or Manhattan and still, go to entertainment here. There are suburban areas outside of the city that are far less expensive, and you just have to be willing to commute. If you want to totally relocate, there are places they can't give away properties because the population is leaving. And if you have the type of job where you can work remotely, or you're a high demand type of job, then you can just relocate completely and have so much more for far less. So really no shortcuts. You're always going to have a down payment. You're always going to have your closing costs. You're always going to have sufficient savings and income and credit score for the bank to decide to basically cover 97% of the purchase. If you can't do that, like I said, you can try these programs, but the programs don't really help. And rent to own, or lease with the option to buy, only gives you time. It delays things. So it's a good strategy if you had the income and the savings, but your credit score wasn't where it needed to be. It gives you time to get your credit score up. If you have the income and your credit score is good, but you don't quite have the savings, it gives you time to get your savings up. But you still will have to qualify in the end for a mortgage. So if qualifying for a mortgage is your issue, then you got to get your income up, or you got to find another location to live. And then again, you can commute to the city. You can work in the city. That's pretty much it. So first-time home buyers, that's the process. I love the questions, guys. Please comment, subscribe, keep the questions coming, and I'll see you next Tuesday.